What's up, y'all? It's Try. Tuesday, March 3rd, and the aftermath has dropped a lot to start the day. Kind of rallied back towards the end, and as I said, much ado about nothing. I don't know if it's going to continue that way. It is a fluid environment right now with what's going on. Headline on the Wall Street Journal today was it's a widening conflict, and so it kind of set the market off on the wrong foot. And again, it rallied towards the end. I don't have much to say on it except what I've been saying. And so you might want to check out some of my old clips and stuff like that. But it's it's the same message. Just stick with the long-term investing plan, and continue to passively index and continue to contribute on a regular basis to that to your plan. So I was actually reading a Wall Street Journal article. Mr. Beast is apparently starting a financial something or other for kids, starting them off, allowing them to access Bitcoin and all this stuff. Yeah, I mean, good luck to him. I mean, it's a different game. I mean, financial planning is like budgeting, which is important, and saving a certain amount of your income, and it's not always easy to save, but every dollar you save and that you invest, I always talk about investing, but how do you even get to that point? You got to save. And if you save enough, you'll be able to invest it and in whatever investments are out there. I like the stock market, and I like because you can get started with very little capital, and if you find the right companies, you can earn decent returns. And it's called compound interest. It's very basic. I obviously, compound interest, they call it the eighth wonder of the world because of how your money grows exponentially when you invest it for the long run. The problem is people don't do that correctly, and they don't end up getting their fair share of market returns, which individual investors can do by indexing, buying an index fund and contributing regularly to it. Whether the market's up, whether the market's down, you continue to contribute to it. So yeah, not much to report on that end. In terms of market activity, it's just the same sort of fluctuations in the market that you would expect on a day-to-day basis, even on a yearly basis. Other than that, yeah, I mean, like I said, I usually do these at the end of the day, so I kind of have to rack my brain a little bit. Yeah, so this is continuing to, and then yeah, I mean, it's just a hot mess right now, and I kind of reviewed it yesterday, and it's kind of confusing. It's kind of discombobulated because at one point I'm like, well, if the market drops on an event happening, that means that they were expecting it. And then I also say that same thing if the market goes up a little bit. And I guess it depends on how much the market goes up and down. If it's if it's a relatively muted up or down, then it's not something then usually they were expecting. It also depends on the type of news it is. If it's bad news in the market, if it's supposed to be bad news, I guess it depends on what's bad or good news, right? But the point is, I generally think if there's an upside surprise, if the market goes up on a big event that was announced in the economy or whatever it is, that usually, to me, it usually means a positive surprise, a pleasant surprise. Because usually if the market was expecting whatever was expected, the market tends to drop a little bit on the day of an event happening. But if it's better than expected, it'll rally. There's a lot of assets right now around Iran. So maybe people expected it, or the market at least expected it to be pretty bad, and maybe not as short as it's projected to be. Maybe not as perhaps devastating as it was for the Iranian leadership. Now it leaves a sort of a leadership vacuum. So there's risks as far as who's going to take leadership at this point. Technically, it could be worse leadership than there was before. It remains to be seen, and it's a fluid situation. So, but at times like this, it reminds you that you should really only be investing with long-term capital, as in money you can leave in the market for like 3 to 5 years. It should be money that you forget about. And if this sort of makes your stomach churn a little bit, then you may want to rethink. I would say there's ways you can practice and work on that. Don't look at the market every day. Don't pay attention to all the headlines. Don't look at your portfolio every day necessarily, because it's not healthy and there's a lot of noise, and that doesn't have any effect on your portfolio. So ways that you could work on that by just really ignoring it. And then everybody usually has a little bit of allocation to bonds. 20%, as I've mentioned in previous podcasts and lives, is a low number. And nowadays, you probably should have it in short-term bonds. So It's getting warm, folks. But I mean, nowadays you should probably have it in short-term bonds, but that's kind of changing as well. So you can always allocate more to bonds if you're worried about stocks. Instead of 20, you can get it up to 30 or maybe 35 or 40. So, I mean, let's just say this. The conventional portfolio used to be 60-40. And then bonds got shellacked in like 2022 when interest rates went up. So when interest rates go up, bonds go down in value. And they can lose value. So I think if you're investing, you have to be okay with volatility. You have to be okay with values going up and down. I mean, that's just the nature of it. And you have to have a long-term outlook. And there's things you can do to help you with that. But if you find that you cannot help yourself, you cannot help but look in your portfolio, you cannot help but look at the news, you cannot help but like jump at everything, then it's going to be really hard for you to make money that way. So that's the best advice I can say. Like, train yourself not to jump at everything and listen to everybody. You know, people like to talk. It's like, it's turned into a sport nowadays. You know, Robinhood has made it easier to trade certain contracts, prediction markets, there's betting markets, there's just all this stuff, and there's so much activity and stimulation that it is hard to stay focused. And so, that's why I try to get on when I can and remind folks that, hey, it's going to be okay long term. Have a long term outlook. That's really the only way to invest. And that's how you're going to make the most money, with your investments. And they should be long term funds. It shouldn't be money that you need tomorrow. It's money that you can put away for a long time, for your retirement, basically. So you really shouldn't be looking at it or worried about it. Once you invest it in an index fund, and I go over that in actually, I think my first or second podcast. So you might want to check that out. The actual mechanics of it. And I had a live on my Facebook that was deleted because Facebook doesn't hold on to my lives. Now that I know that I'm on YouTube now, where I went through how to go about, even rolling T-bills, which is a whole nother thing in terms of how to buy basically short-term bonds, treasuries. But that's a whole another discussion. I mean, but if I were allocated to bonds right now, I'd probably buy short-term bonds. But yeah, check if you want to know the mechanics of but I mean, it's really easy. I mean, just, open up a brokerage, deposit cash. It's not invested automatically. You have to go in and literally invest it yourself. Find what the symbols are, call customer service, hey, what's your symbol for your index funds, for your S&P 500 index funds? How do I invest it? Go through some tutorials online, spend some time on how to make a buy or sell trade online, or if you feel more comfortable doing it over the phone, they'll charge you, a certain fee. I think it's more expensive. There's essentially a commission if you're going to trade over the phone. So you can trade, the online trades are usually free. So if you call in, then they're going to charge you more. But, for your first trades, it may be worth it. And I don't know how every brokerage does it. I know retirement plans, once you set a direction for the retirement plan, there's two ways in retirement plans. You set the direction for the future direction, or you can reallocate the current allocation. And they can both be the same percentages, right? 80% to say S&P, and then 20% to short-term bonds, for example. And then 5 or 10% to an international index fund. And so you can set that for future contributions. And so you can have, your company usually has a program where they just take a certain percentage of your check and allocate it based on your preferred allocation. And then you can actually go in and literally move the cash based on, or the current cash, or the current allocation in your portfolio. Let's say it's 100% stocks right now. You can literally say, well, I want 10%. I want to move 10% of that to bonds. It's good and bad. I mean, people tend to overtrade. They tend to make decisions at the exact wrong time. And they tend to be short-term oriented. And so, like I said, that's why I think it's important to ignore the headline risks. And that's really the only way, to keep your head cool in crazy times. So, and there's a lot of crazy in the market right now, certain areas of the market. That doesn't mean the entire market's overvalued or anything. I'm not saying that. Certain areas are a little more overvalued than others. That's the best way to say it. But if you're widely diversified in an S&P 500 index fund, it's, there's an article about how little the S&P 500 index fund has moved, and yet some stocks in the S&P 500 index funds, especially this year, are getting rocked by 20%. downwards, but on the surface, pretty smooth. So it's a very nice index fund and an index, and so I recommend everybody index. So other than that, I don't really have any fun things right now in terms of working on taxes. I'm working on doing that, and it's getting warmer. It's getting warmer out here. Baseball season is almost here. Postseason for the NBA is almost here. The Kings aren't going to make it. I don't even want to talk about the Kings, but I could do a whole segment on the Kings in terms of, I'll say this though, they are not where they're supposed to be. I mean, the GM, let's give him some credit. He made some decent draft picks, but he inherited a mess. There was a lot of injuries, so it looks like the Kings are going to tank the season, which is fine because next year is a pretty good draft class. So you can't really say you're tanking though. So to all those people who are looking at the Kings and are like, oh, that's terrible. It's like, at some point you just got to give up on the season, And right now, it's not looking good for the Kings, so might as well save your energy, I guess, for next year and rebuild, so to speak. Which I feel bad for the older players, but that's what happens sometimes in the league. So, Winter Olympics, the United States did great. Set a record for gold medals, second most medals, I think, in the whole Olympics. So that was cool. And then Eileen Gu is actually going to be Grand Marshal at the San Francisco Chinese New Year parade. Tickets are sold out though, but it's free if you go. You can just go look at the parade route and go in the crowd and check it out, which is awesome. That's pretty cool. I even think it's brave, because she's getting so much hate right now. She even outlined what happened at Stanford. Check that out. Stuff that's happening in Sacramento that I don't like. The Doko stabbing. What the heck? There was a defacement of a Japanese Sacramento Buddhist church on the day of remembrance regarding the Japanese internment camps. Somebody put white supremacy tagging on the side of that church. It's more like a temple, But yeah, I saddened by that. That really shouldn't be happening. And whoever it is a dummy, obviously. And a coward for running away. But yeah, I'm not okay with all these Doko's had many shootings and stabbings. I don't know what's going on. It's not good. It doesn't reflect well in the city. But any big city is going to have some of that, especially in busy areas with nightlife and things like that. It keeps happening in that Doko area. So, but a lot of people are hanging out too, so I do listen to EDM, as you all know, or you may not know, but you can just check my profile and you'll see. Went to my first EDM I've reviewed this too, but not in this short format type thing. Went to my first EDM concert. I call it a concert. I don't know why people call it raves, but I went to my first EDM concert in Charlotte, North Carolina, where I was working for Bank of America, and I attended a Calvin Harris concert, and that was my first EDM concert ever. And I had a lot of fun. And so, yeah. And then I watched Zed one time in Vegas, but there's a lot of interest in EDM, especially from younger people nowadays. I noticed, and it's kind of changing from the Calvin Harris genre to more like Millennium and rock infused with EDM, which I like. Obviously I've been to a bunch of Millennium, and then now it's going to Knock 2 and ISOXO. I wouldn't say the baton has been passed yet, but there's some really nice events. The Bay Area always has some nice artists coming through. ISOXO announced recently. I don't want to be like an EDM influencer or something like that. It's just, I don't not want to be. It's just something I've been going to and checking out. So, but there's a lot happening all the time. I feel like year round. I feel like it's bigger than even when I went. That's how I feel. It seems bigger. These festivals are gigantic. EDC's always been there, but there's Nighthearts now. That's newer. They call it a ticket war. They're going on a war online over these Nightheart tickets. So I was a little surprised. Everybody's posting, I got tickets to Nighthearts, and it's just, you won the war apparently over Nighthearts tickets, which is cool. It's these back-to-backs. It's basically rock. The younger folks, the younger generation is into really into rock-infused EDM. That's what I call it. So I haven't been DJing as much as I should be, but it's busy with tax season, and the markets have been a little wild for active investors. So, but even for active investors, I would say, look, if you've done your research, and you think, it's adequate research and you put in the work, then you got to stick with it, So whether you're passive or active, it's the same philosophy. You have to be a long-term investor. Those principles still apply. And you can't, you got to ignore market fluctuations. Benjamin Graham calls it Mr. Market. I even think to a certain extent Mr. Market has changed his behavior, but the principles are still the same. Not everything Mr. Market says is correct. Many times he can be wrong. So that was Benjamin Graham's it was almost a personification of the market, calling it Mr. Market. Mr. Market is this bipolar dude who every day is like, hey, I'll buy, I'll sell for this price or that price. It's up to you to buy or sell. You can ignore him though. It's a very actually like a Zen Buddhist concept, actually, of keeping your mind level and keeping your emotions in check and seeing not the everyday fluctuations, but in stock market parlance, it's the intrinsic value. Prices tend to converge to a stock's or a company's intrinsic value. So long term. So the underlying value should be what you're focused on, not the daily fluctuations. So if you think a stock is worth $5, Mr. Market says, I'll pay you $10. Here, go ahead and sell it. If Mr. Market says, yeah, I'll give you $2 today, it's up to you to sell it or not. So you don't have to though. So that's the whole Mr. Market. I don't know what they call it. I think it's a personification of the bipolar nature of the stock market, and it's a good teaching tool in my view. So, and again, that's The Intelligent Investor by Benjamin Graham. The principles remain the same. Legendary book, legendary author. Certain things are outdated, but such a solid foundation for investors. So Charlie Munger would say in many ways Graham was wrong though in just buying cheap stuff, and you really have to make a business analysis and do a business analysis to figure out what are the competitive advantages of this company that will keep these earnings protected for the long run. So I know I'm jumping around from like fun stuff to stock market, but this is Try's world. I mean, this is what I think about on the daily, so yeah, I mean, Charlie Munger's writings are incredible as well. But yeah, I don't know how I jumped from EDM to stock investing again, but well, I basically haven't had time to produce music or do music at all, but it's something that I view like it's just like my company now. I don't force anything. I mean, I do it naturally. Even when I go on these podcasts, I do it naturally. I do it because I want to. I don't do it because I feel like I'm forced to. So I have fun with it. It's fun for me, so I do it. I mean, I don't expect to be Mr. Beast or like some big time influencer. Although, thank you for the love. I am getting subscribes and a lot more views than I would have thought. That's why I keep producing it as well. It's because like on all platforms, I'm getting thousands and thousands of views, sometimes way more than that. I'm talking about YouTube, shorts, and everything. I post it everywhere, by the way. And then sometimes I post on X and I get like way more impressions than I think I would. And so, I don't know, people seem to be responding to it. I mean, and so I do try to catch like what people like and stuff like that. But at the end of the day, I don't totally care. I mean, I put out content that I think will be helpful, and I try to do it in a timely manner. So, and then Riverside, the editing app I use for podcasts, is so easy to use. And they cut through all the BS, uhs, and pauses like that. I used to like sit there and agonize over it and have to cut out each one. But now they have this AI thing where they just swipe it and then they give me a bunch of clips I can use. So it's like, oh my gosh. Editing cut down by like in the span of 2 years that I've been doing this or so. I mean, editing's been cut down by, I would think just by that alone, like 80%. I mean, I don't even have to do any editing, really, except if there's a segment that I don't like, but I think that sort of defeats the purpose of a podcast. If I'm thinking about a topic though, and I don't know what to say, I'm just silent. I don't say I'm just silent. And then Riverside would just cut it out. But some of the topics take me a while to think about, but then when I realize what I'm going to say, it could be that gem. It could be that helpful thing that helps my listeners boost their performance, their stock market performance that much more or something, So it could be helpful stuff. So I got away from the lives. They're long. They're a little unnatural for me because I got to work. I can't be like living and working. So, I do this at the end of my day. I notice my eyes are all red because I'm up so dang early. But yeah, I mean, I do this at the end of the day, and it's after I've taken care of a lot of stuff. And so I have a little bit of a break, and it takes my brain a little bit of time to just reorient. But yeah, I mean, if every now and then I can close my day with some thoughts that may or may not be helpful, I think that's fun, And so, like I said, I mean, I'm just having fun with it. But I do see the responses based on like what format I use, like what I talk about, stuff like that. And I do try to, make some changes based on that. So, but I do appreciate the love, like whether you're viewing, whether you're liking, whether you're subscribing. I've been, I keep saying, but I've been very surprised by the response. I mean, I have like 300 followers on Instagram, and sometimes I'm getting like a ton of views, but then I share it on Facebook, and I have a lot more followers on Facebook or friends on Facebook. So, but still, I'll post like, I have like 15 subscribers or something on YouTube, and I'll get thousands of views. So people must be getting something out of it. I think it's the timeliness of it. So that's why I'm trying to do it a little bit more frequently as well. So people, I don't know, have a reliable source of information when they are confused. I don't know, But so again, I appreciate the love. If you do enjoy this, like, subscribe. I don't know, it just depends on the platform, right? Like, subscribe, follow, whatever it is, and check out my other videos. All right, y'all. Appreciate it.